Hey there, savvy investors. Ever wondered what happens when a stock becomes incredibly difficult and expensive to bet against? Today, we're diving deep into the fascinating world of hard-to-borrow stocks and the mechanics that can lead to a short squeeze, all through the lens of a very specific company, TokenCat Limited, ticker symbol TC. We're going to break down why this stock popped up on our screener, what its current situation means, and what you should be watching for. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on TokenCat Limited, or TC. This company, formerly known as T&G, operates in the communication services sector, specifically within advertising agencies. Through its subsidiaries, TC runs an omni-channel automotive marketplace in the People's Republic of China. They also offer electronic equipment trading, technical support, and consulting services, alongside subscription and support. Currently, TokenCat Limited has a market capitalization of $45.04 million. Show stock chart for TC. Looking at recent price action, it's been a roller coaster. Today, TC is up plus 10.97%, which is a nice bounce. However, over the last 5 days, it's down minus 19.25%, and if we stretch that out to the last 30 days, TokenCat has seen a significant minus 80.5% decline. Volume-wise, today saw 1,048,200 shares traded, but that's actually quite low compared to its 30-day average volume of 3,008,136 shares. This means today's relative volume is only about 0.3 times this average. What is cost to borrow and why it matters? So, what exactly makes a stock hard to borrow? When someone wants to short sell a stock, they first need to borrow shares from a lender, usually through their broker. They then sell those borrowed shares, hoping to buy them back later at a low price and return them to the lender, profiting from the difference. Just like borrowing money, borrowing shares comes with a fee, known as the cost to borrow, or CTB. This fee is typically expressed as an annualized percentage. Why does this matter? A high CTB indicates either incredibly strong demand from short sellers to bet against the stock, or a severely limited supply of shares available to borrow, or often both. When you see annualized fees like 900% or even 1000%, it means that maintaining a short position becomes incredibly expensive on a daily basis, eating into potential profits or compounding losses very quickly. Why this stock is hard to borrow right now? Now, let's look at why TokenCat Limited landed on our hard to borrow screener. The annualized cost to borrow fee for TC right now is an astonishing 952.2%. Highlights CTB number. To put that in perspective, that's almost 10 times the amount of money you'd pay to borrow shares over an entire year, effectively compounding daily. Not only is it high, but the CTB momentum for TC has exploded, increasing by plus 280 percentage points over just the last 5 trading days. This signals a rapid escalation in the cost and difficulty of shorting the stock. Adding to that, there are only about 60,000 shares currently available to borrow, which is a tiny fraction when you consider TokenCat's estimated float of 32.2 million shares. Our internal composite squeeze score, which combines factors like CTB, borrow supply, volume, and technical setup, currently sits at 45.3 out of 100 for TC. While this score indicates some interesting dynamics, it's important to note it's not a top-tier score, meaning other squeeze factors might still be developing or are weaker. Squeeze mechanics explain. So, what could happen with these conditions? A short squeeze occurs when a stock's price surges, forcing short sellers to buy back shares to limit their losses and close their positions. This covering demand, often in a hurry, adds even more buying pressure, driving the price up further in a vicious cycle for shorts. With TokenCat, if that mere 60,000 available shares to borrow shrinks even further, and the existing short sellers are paying over 950% annualized to maintain their positions, any significant buying pressure or positive news could quickly make those short positions unsustainable. They'd be forced to buy back shares, potentially triggering a rapid upward movement, especially given the already limited supply. Dilution risk check. Before getting too excited about squeeze potential, it's crucial to check for dilution risk. Dilution happens when a company issues new shares, which increases the total number of shares outstanding. This can offset or even negate a short squeeze thesis because it increases the supply of shares, making it easier for shorts to cover without pushing the price up, or even providing more shares for shorting. For Token Cat Limited, we found good news. Our checks show no recent dilutive SEC filings like -1s, or 424 BS in the last 90 days. This means there isn't an immediate threat of new shares flooding the market to potentially dampen any squeeze efforts. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For Token Cat Limited, with its 952.2% CTB and only 60,000 shares available to borrow, here's what to keep an eye on. Firstly, continue monitoring the cost to borrow fee. Sustained high or increasing rates are key. Secondly, watch the available shares to borrow. If that 60,000 number keeps shrinking, it builds pressure. Thirdly, significant and sustained increases in daily trading volume, far above the current 0.3x relative volume, would be crucial. Today's plus 10.97% move happened on lower than average volume, which means the buying pressure wasn't exceptionally strong. A true squeeze would likely involve multiple days of dramatically higher volume. Joe chart, zooming on volume given Token Cat's 32.2 million share float, a lot of buying power is needed to move the needle significantly. Remember, a high cost to borrow does not guarantee a squeeze. It can also mean that short sellers have very strong conviction that the company's fundamentals justify their bearish bet, and they are willing to pay those high fees to stay short. So, Token Cat Limited TC presents an intriguing setup with a sky-high cost to borrow and extremely limited shares available to short. While the recent price action and volume have been volatile, the lack of recent dilution risk is a positive sign for any potential squeeze thesis. Keep a close watch on those borrow rates, available shares, and any sustained increase in volume and price action. Always remember to do your own thorough due diligence. If you found this breakdown helpful, please smash that like button, subscribe for more in-depth stock education, and let us know in the comments what other hard-to-borrow stocks you're tracking.